Stockradar Stocks on the move for another week. Today's date is the 24th of July 2025. My name is Richard Lee and I manage the Stockradar.com.au website. Okay, we're talking about the big switch today. The banks and the miners, it's all the talk of the town, but we're looking at a few other different things at the moment and we'll go through that later on. You might notice here I've got my Ocean Pools book here. Over the last couple of years I've had operations on my shoulder and both my knees, and during that process swimming the rock pools or the ocean pools around Australia has been part of my healing process. So I've just done, there's about 75 in Australia, of which there are 70 in New South Wales, so they've got the most of them. I've done the northern coast, the southern coast, and in November I'll go along and do the northern beaches of Sydney from Palm Beach down to Sydney. Once my knees fixed up finally, and then hopefully early next year I'll do the southern coast from Sydney down to Cronulla. So that's been a bit about my healing process, something that I tend to do as a process outside of my my stock trading, and it's just something fun that I do. So there you go. So let's get back to the big switch, back to the stock market, and see what we've got today. Okay, so firstly we'll go to the trend intensity ratings, and okay, that's not the right spot. Okay, trend intensity ratings. Challenger, which we're going to look at later on. You can see the picture there. I'm going to blow that up and have a good look at that bit later on. It's quite an interesting stock. Downer EDI is making new highs. Harvey Norman's approaching its highs. Megaport's doing well. Netwealth is doing well. Look at that later on, along with Hub. The platforms are doing well. Orica's doing really well. Qantas is making new highs. Telstra just pushing higher and higher and higher towards $5, as is TPG. So we've got two telcos there, and then of course we've got Ventia Services, which is also doing well. There are more top 10 ratings this week, probably about another 7 or 8 of them. So there's quite a few groups in that group of stocks that we've got, which is 54 stock picks, all rating 10 at the moment. So we're looking pretty strong market at the moment. We've got 4 new stocks this week. Nice little cross section there. Nice little addition to our new stock picks. A few more for you to pick from there. So that's quite exciting again as the market builds its strength. Portfolios are all pretty full. We can have a look at those right now if you like. They're all pretty well full. They have been for a while. We haven't had a lot of movement because there hasn't been any exits. They've all been moving pretty strongly. So if we go straight to the first one, our conservative portfolio, which is as a data universe of 20 stocks, and we have a maximum holding of 10 stocks, is at 7 out of 10 at the moment. So we've got 70% equities, 30% cash. It's returning 11.3. It's a steady performer. It really is almost a predictable thing as to where it's going to be in 20 years from now if you're looking to retirement then, so you get a very good idea. Our best one is our Energy 5 stock, which has been since inception, since 2003. It's full at 5 out of 5, so 100% equities, 0% cash, 18.2% it's raising at the moment. It's had a wonderful couple of years, the last couple of years. What we do is when the market's not trending, we're preserving capital. When it's trending, we jump on those things because we have 5 stock holdings. They're all 20% of the portfolio, and they really do maximise and leverage the benefit when the market does trend. And we know the stock market trends up most of the time, and we've had a very good trend the last couple of years. Then we go to the 10 stock, which is a little bit less powerful, a little less volatile, but it's generating 15.7% at the moment, and it is also full, 100% equities. Our Energizer 5 stock, which we started in August 2020, is full at 12.9%, and the one that we started in March 21 is also full at 16.3%. So it's all doing really nicely. So all the portfolios are doing well at the moment. Compared to the accumulation index, over the last 22 years, it's done 8.9%. So there's your comparison there. That's how we leverage our stock market. We're high conviction, and that's what we do. Okay, so that's just the portfolios. Let's go and have a look at the overseas markets now. Okay, now, so we're still excited because the Dow's almost making a new high there at the moment, just trying to get through. It's had a pretty good rally since April this year, been pretty powerful, and it's now following along in the steps of the S&P, which is starting to consolidate itself above those highs quite well. Volume's quite encouraging there, momentum's good, it's above the average, so it's going to get a good trend intensity rating, as is the Nasdaq, which is also pushing ahead nice and strongly there, and reasonable volume there, nothing to worry about there, all looking pretty strong. So our market, well, we sort of had a blip a few days ago, and everyone thought this was, the end of the world was nigh. But of course, straight away in a bull market, the market turns around and goes two big days up, and it really gathered some momentum yesterday again. So who knows what will happen today? But the market looks strong again, and we're getting a little bit of a shift as we talked about at the start, the big switch. So there's some new game changes coming into the market there, which we're going to have a look at in a second. Okay, so we now go to gold, which again, it's been in this sort of corrective pattern for a while, since sort of April. It's just gone sideways, really starting to emerge to the high end of that range at the moment. We'd love to see it back through those highs. There's been some selling there, but some good healthy activity there, so it all looks pretty good. A bit of a slow in momentum, which is fine, but everything as far as the trend goes and the price, high highs and high lows, all looks intact, and that's the most important thing. Okay, then we go to copper. Now, pretty impressed with copper. It's been holding onto these gains quite nicely and moving ahead slowly but surely. The big picture is bullish, as we know. It's holding and adding to the gains at the moment, so it's also looking pretty good for the copper stocks. And it looks like really the main beneficiaries are going to be the big leaders like Rio and BHP, which have responded a bit with the iron ore and a bit of copper there. And we'll have a look at those in a second. Okay, so that's copper, and Brent crude again. It's really not doing much for us. Still trying to reverse a trend. We've got a little bit of an upward movement here for the last few weeks, but really it hasn't really taken out any resistance yet. So there we go with the commodities and the indices. That's where we lie with those things. Okay, so now I was just going to mention with copper there. It's although it's going well, we do have a bit of a weak link here with the volume. Now, as you know, with trend intensity, I tend to weight things not to one indicator, but to a group of indicators. So I look for price trend, I look where my moving average is, I look where my volume is, and momentum is. Now, all those four indicators, 3 of the 4 indicators are very positive. Volume's the only weak link. We've had a bit of a spike here. I would like to see it a bit better, but it hasn't happened as yet. But as I said before, the trend intensity, the weight of evidence is still that it's strong. So I'm sort of happy with copper at the moment until told otherwise. Okay, so let's get some stocks now. We'll get a quick review of Linus, which is doing pretty well. It's holding onto its gains nicely. It's had another good week so far this week. We've got a good strong possibility of it testing R1, and whether it gets through R1, well, that'd be nice. We'll have to wait and see about that. But the trend intensity rating is +10, which is strong. So we're pretty happy about that at the moment with Linus. Okay, then we go, let's have a look at BHP. Well, since we saw it a couple of weeks ago, it really has. We saw that little double bottom of support there. We had this big downtrend here. Now all of a sudden we're seeing a fairly good spike. It's gone from 35 to 41 in pretty quick time. It hasn't really given us a clear trend reversal yet. We've had a little bit of a break of resistance here, a break of the moving average and downtrend line. It's very, very encouraging. The trend intensity rating is still -4. So it's early days yet, but it certainly looks quite positive as far as I'm concerned. The reaction has been quite good. And if we squeeze up this volume a little bit here for you, you can see there's been some very good volume. We had some quite big selling on this push down here, which didn't break the lows. It held those lows, and now we've seen some very, very good volume push this BHP higher again. So there's some excited people there. I just need a little bit more price evidence before I'm going to go barreling into this one at the moment. And we can have a look at Rio as well. It's also changed. It's also jumped pretty sharply from about just over 100 to about 120. So that's been quite a good move, nearly 20%. We've seen the same sort of volume pattern here. We saw the big selling here, but all of a sudden things have changed, and we're now seeing the buyers jump on this again. Again here, we're still in the downtrend. We've just broken the average. Momentum is still below 0, but turning. So I think the wheels are turning here. Trend intensity rating is still -7 for Rio. So again, bit of perspective there. Let's not get too excited about things. There's always plenty of time to get in on these stocks. We've got highs to take out yet. We've got resistance levels to take out yet, and there will be plenty of gains to come once we've had some certainty in this change in direction at the moment. So that's BHP and Rio. It gives you a bit of a positive thing. Just talking about the big switch. Well, is it the big switch yet? Well, maybe, but there are also a lot of other stocks. I've had 4 come in this week, a cross section of stocks, and there's a few more that I can talk about at the moment. Recently, we've had 3 metals and miners breakups. We've had 2 consumer discretionary breakups. We've had 1 communication stock, 1 health stock, and an energy stock. Coming up on the radar at the moment, I've got 3 new miners on alert. In fact, a couple of them came up today on stock alerts, as well as a health stock. There's one commercial and consumer services stock. There's 2 health stocks on the radar, just about to break up. One of them hit an alert this week, yesterday, and one utility stock, and there's also a tourism stock there that I'm looking at very closely. So you can see all those in the trading centre, but I'm quite excited about the movement there. So it's not just about the miners, there are plenty of other stocks that are looking to reverse some trends. Okay, so firstly, what I'm just going to get onto before I go any further from the miners, I just want to look at the banks. I only hold 2 banks at the moment. I hold CBA and Bank of Queensland. Both flirted with some stops earlier this week, but are holding. We'll wait and see. But we can also see 2 stocks to the majors here. We've got Westpac here, which hit its high here and is reversed off there at the moment. So it could well retreat back to S1. Unless it gets through this high pretty quickly. So it's not giving me anything at the moment. We're going to be very careful of that. Trend intensity rating is neutral at +1. Rally so far, this one here is not convincing with volume there. Momentum is positive and it's just above the average. So a little bit of a mixed bag there. What I really need to see is R1 be taken out decisively. And that's really the main thing at the moment. But it's certainly shied away from there pretty quickly this week. Now if we go to NAB, it's also an interesting situation where it's actually at its cycle high at its all-time high, which is even more significant. And again, it's retreated pretty quickly this week off that level, and we may well see it back to S1, which is down around $33. We saw some good volume push this higher, but it did come back pretty quickly and some quick volume there. So again, a bit of a mixed picture like Westpac, and there's no real certainty on either of these things at the moment. But we just sit and wait. If we do get a signal, we do get a break of R1, it will send the banks higher in all likelihood. So we'll just wait to see what happens. But for the moment, they're a little bit coy about moving above those levels. So we'll keep an eye on those for the moment. And as we know, CBA has come off its high pretty quickly as well. Okay, now things that are changing. One of the stocks I have been looking at for a while has been Challenger. It's been an interesting stock. It's broken out of a big trading range, and we saw that earlier on when I looked at the trend intensity ratings. If we just blow this one up a little bit and have a look at a bit of history here, you can see Challenger, the all-time high is up around $14. The immediate resistance is just over $10, but we've had this big trading range pattern here, which has been pretty impressive here. It's been chopping about here for quite a few years. All of a sudden, we get this happen. I'm going to just push this up a little bit. I might just blow this up a little bit now. You've seen the history there. So we can see what's happening at the moment, especially with the volume. Now, since this rally started, we can see the volume has been very, very impressive. Let me just get this right. Okay, so now we can see the name, trend intensity rating is +10. So this has been a very sharp move. Once it broke out of the trading range, that was our signal to jump on board. Okay, this is a very good volume. Momentum is kicking higher. It's above the average. Higher highs and higher lows. Trend intensity rating is +10. But I just wanted to show you the potential of this sort of stock. And there were quite a few of these stocks that are moving above their resistance levels. As I said, we've had 4 new entries this week. We had a couple in the last couple of weeks. Some of these stocks are starting to move. So Challenger is one that's worth watching at the moment because look at that volume there and the momentum looks fantastic. So I'm quite excited about that stock. Okay, so it's one of a few that I'm looking at the moment. Okay, now I just want to go through a couple of gold stocks because gold's been interesting. Although gold is pushing higher, we've had quite a diverse response to a few stocks that were trending quite well. So firstly, I want to go to Regis Resources, which we know has had a good trend. We had this big accumulation pattern which broke off. I'm just going to blow this up a little bit for you so we can have a good look at it. We saw this breakout here back down at $2.40. It's moved up to nearly $5, and so all of a sudden we've seen this change. So we've seen some very good volume pushing this stock higher, and then we've seen some selling starting to appear. The sellers became active, and then we're pushing here, and you can see my stop level is right here, and we're just above the stop level at the moment, and we haven't stopped below it, but we're very, very close. So we've got to be careful. So the stop, when the trend here always moves up with prices, it never drops down. So this is the highest point it's got to, and it remains a hold above 441 for us Regis Resources. So this one is a hold at the moment. We've still got the resistance level up here at R1, which it could still get to. We don't know, but we're just watching this one carefully at the moment because even though gold's pushing higher, we're just getting a little bit of selling appearing in some of these stocks. Newmont is another one which is doing quite well. It's responding quite well. We had a good little trend move back up here. It came back, made a new high above here, and it's moving higher again, and it closed at an all-time high yesterday, which has been good. And we've got some good volume through here, fairly impressive. We've had some selling there, but it's looking okay to me. Trend intensity rating is 8, so this one here looks okay to me, Newmont. Then we go to Northern Star. Now all of a sudden Northern Star, which had a beautiful big long trend there for quite some time, all of a sudden hit the highs above $22 and came off with a big thud, big selling, dropped it, and it went out, broke our stop. Trend intensity rating is now -5, so this one now is a negative. Okay, so Northern Star has obviously changed its spots and is not moving higher again, so we're out of that one, and that's a change. The next one I want to look at is Evolution, another good quality stock. A little bit of copper in there, only about 10%, but a little bit of copper in there, but it's also broken down. We saw some selling hit this stock quite quickly, and the price dropped very fast all of a sudden. Now I don't know why that happened, but it broke our stop level, so we protected our profits from down here, and we've turned neutral on this one, and the trend intensity rating is also neutral. So again, we're getting a sort of slightly mixed picture in the gold, which is sort of weird, because as the Australian dollar goes down, it magnifies the gold price going up, and the Australian dollar gold price has literally gone through the roof over the last couple of years. So some of these stocks are just a little bit off the boil, but we never know what's going to happen. We've always got to follow the price. The price never lies. It tells us what to do. And so I just wanted to note that for you, that it's not all beer and skittles in the gold sector at the moment. Okay. So having gone through the miners and the banks and a couple of those gold stocks, just want to finish off here. I showed you Hub last week, which did very well. The platforms are doing very well, these stocks. It's sort of interesting, this one had a nice trend. Then both Hub and Netwealth came off with a thud earlier this year, but they certainly turned around and went straight back up, and the volume, as you can see, has been very impressive. Momentum's been impressive. So again, we've got triggered a new entry here with an entry above the old high there, and this is now moving ahead very, very strongly as well. So those portfolio stocks, platform stocks, are doing very well. So there we go. There's a few stocks for you. Again, as I said, there's plenty more in the trading centre for you to have a look at, plenty more opportunities for you to have a look for, plenty more alerts coming up there as well. Okay, that's all the stocks I've got for you today. I'll just cover off quickly on the new trends. Really just what we're looking at the moment is really the banks have taken a breath. In fact, I haven't been in Westpac and NAB for a long time, or ANZ. They've been a bit quiet, their highs. CBA has been the outstanding, made lots of money for us over the last couple of years, and Bank of Queensland's also had a good run, but it's slowed recently as well. So the banks are taking a bit of a breath at the moment. But as always, things change, and not only the leading miners attracting attention, but there are also a new wave of stocks also attracting attention, diversified financials, and all sorts of different groups of stocks there. I've mentioned to you before, a few miners, a couple of health stocks there, which are looking very interesting, ready to jump back in, even a tourism stock there. So lots for you to have a look at on Stockradar. There's my lovely disclaimer for you, and the big switch is on, not just to the miners, but plenty of other stocks there. So plenty for you to look at there. I hope there's some information there for you that's useful today. As always, you can take a free trial of Stockradar, see where all our stops are, see where all our new entries are coming in there. As I said, we covered a whole group of new stocks from June 30th, as we took out the REITs and the ETFs. So there's a whole lot of new stocks there for you to have a look at. So that's about all I've got for you today. I'm feeling a lot better, and I'm ready to get very excited about this market, which has just been offering opportunity after opportunity. And this is what the stock market does in certain phases. It just gives and gives and gives. This will change, but for the moment, we ride the wave as best we can, take control of what we do, and manage our positions properly. Okay, so our ability to adapt in these situations as small retail traders is very important, because the instos can't move as quickly as we can, or they don't move as quickly as we can. They're more weighting into stocks, maybe cutting their weighting a bit and adding a bit of weighting there, but we can be very nimble, and it's an advantage that we have, and we should recognise and take advantage of it, because we can move out of stocks into other stocks very, very quickly, and we need to be aware of those changes, responsive, and move with those times. Okay, so it's a big advantage that we should not ignore. Okay, so that's about all I've got for you today. I hope you found it all interesting today. Can't wait to come back for you next week to see what happens next week. Watch your trends, heed your stops, keep it simple, have fun, stay safe, and I'll see you all again next week. Thanks very much.